Good morning, and welcome to your daily financial news roundup. Today, we're diving into the stories shaping our economic landscape, from Alphabet's massive AI investment to record-breaking market highs. Our top story, Alphabet, Google's parent company, is making an $85 billion bet on artificial intelligence. We'll break down what this means for tech, their cloud business, and their latest earnings. Plus, we'll touch on a historic Federal Reserve visit, a European banking surprise, and the Nasdaq's new milestone. Grab your coffee. Let's get into the numbers driving the global economy. Alphabet is making waves with a record $85 billion investment in AI infrastructure this year. That's $10 billion more than previously planned, a bold move to stay ahead in the AI race. The surge is driven by skyrocketing demand for Google Cloud's AI-powered tools and services. Alphabet isn't just building software. They're constructing the physical backbone, data centers, custom chips, and advanced cooling systems to power the next generation of AI. This is a high-stakes arms race, with Microsoft, Amazon, and Meta all making similar multi-billion-dollar bets. Alphabet's investment sets a new bar, signaling that future growth in search, ads, and even healthcare depends on AI dominance. The timing, announced during their latest earnings call, framing the spend as a strategic investment, not just a cost. It's about more than hardware. This capital fuels research teams, enabling breakthroughs smaller rivals can't match. The ripple effect is huge. Chipmakers like NVIDIA and data center suppliers will see a flood of new orders. But this level of spending also raises questions about competition and market concentration. Few companies can play at this scale. Alphabet is sacrificing short-term profits for a shot at long-term AI leadership. Their bet: build an insurmountable lead now and reap the rewards for years to come. The tech ecosystem is watching closely. This move could reshape the industry's future. For Alphabet, it's all in on AI, with the infrastructure to back it up. The message to investors and rivals alike: Alphabet intends to lead the AI era no matter the cost. The success of this strategy will hinge on their ability to innovate and monetize this massive computational power. For now, Alphabet is betting big, and betting on itself. The AI race just got a lot more expensive. You'd expect a $10 billion spending hike to rattle investors, but Alphabet's Q2 earnings did the opposite. Despite the massive AI investment, Alphabet beat Wall Street's expectations on both revenue and profit. Search remains a cash cow, YouTube ad revenue rebounded, and Google Cloud's growth accelerated. The result: Alphabet is funding its AI ambitions from a position of strength, not desperation. Investors rewarded the company, seeing proof that bold bets can coexist with strong fundamentals. The market's message: long-term AI investments are welcome if the core business keeps delivering. Google Cloud's performance validates Alphabet's push to diversify beyond search ads. Even amid economic uncertainty, Alphabet's products remain indispensable. Cost controls elsewhere, like slower hiring, helped offset the infrastructure splurge. The takeaway: Alphabet is managing to please both short-term and long-term investors. Their Q2 report shows a company thriving today and building for tomorrow. It's a masterclass in balancing risk, reward, and vision. Alphabet is back on offense in the AI race. In a rare move, former President Donald Trump is set to visit the U.S. Federal Reserve, something not seen since 2006. The Fed's independence is a cornerstone of U.S. economic stability, designed to keep politics out of monetary policy. Trump's visit, given his history of criticizing the Fed and its chair, Jerome Powell, puts that independence in the spotlight. The meeting is officially about the economy, but the symbolism is hard to ignore. For the Fed, it's a chance to show nonpartisanship. For Trump, it's a platform to signal his economic priorities. Central bank independence is meant to prevent short-term political meddling, like pushing for rate cuts before elections. This visit tests that tradition, raising questions about the future relationship between the White House and the Fed. Analysts will scrutinize every detail. Will there be a press conference? What will be said? The timing is critical. The Fed is balancing inflation and growth, and a political visit adds new complexity. Historically, presidents kept their Fed interactions private. This public meeting marks a shift. The event highlights the evolving and sometimes tense relationship between politics and economic institutions. While the immediate impact may be limited, the long-term implications for Fed independence are significant. The world will be watching for any signals that emerge from this unprecedented meeting. It's a headline that goes beyond markets, touching the very foundations of U.S. financial policy. The outcome could shape perceptions of the Fed for years to come. For now, it's a symbolic collision of politics and central banking. Stay tuned for the fallout. Across the Atlantic, Deutsche Bank delivered a surprise Q2 profits of €1.485 billion, beating forecasts. This marks a major win for a bank that spent years restructuring and cutting costs. The investment banking division, especially fixed income and currency trading, drove much of the outperformance. Other divisions, corporate and private banking, also posted steady growth, showing the turnaround is broad-based. The result is impressive given Germany's sluggish economy and broader European uncertainty. CEO Christian Sowing's strategy is paying off, with each strong quarter building investor confidence. The bank's outlook remains positive, though risks like geopolitics and global slowdown persist. Shares rose on the news, rewarding patient investors. Deutsche Bank is proving it can deliver consistent returns after years of turmoil. The Q2 beat is a milestone in its transformation story. It's a positive signal for the wider European banking sector. The turnaround is gaining steam. Deutsche Bank is back in the game. The Nasdaq Composite just closed above 21,000 for the first time, a landmark for tech stocks and market sentiment. The rally was broad. The S&P 500 and Dow Jones also posted gains, reflecting strong investor confidence. What's driving the surge? Robust Q2 earnings, especially from tech giants, and hopes that inflation is easing. Investors are betting the Fed may cut rates soon, fueling optimism. The Magnificent Seven, Alphabet, Apple, Microsoft, Nvidia, and others are powering the Nasdaq's ascent. AI excitement is a major tailwind, with these giants dominating the index. The milestone is both a celebration and a warning. Some analysts worry valuations are stretched. Record highs attract more attention and retail investors, sometimes creating a feedback loop of optimism. But elevated prices mean the market is vulnerable if earnings disappoint. For now, the mood is bullish, with Wall Street's strength spilling over into global markets. The Nasdaq's new record is a testament to tech's dominance and investor faith in future growth. It's a key moment in the 2024 market story. The path ahead depends on whether companies can keep delivering. For now, the bulls are in charge. The Nasdaq's milestone will be remembered. Let's spotlight a booming trend: private credit in Asia Pacific. In just over 2 decades, assets under management have soared to $62.3 billion. Private credit means non-bank lenders like funds and asset managers directly financing companies, bypassing traditional banks. The surge is driven by Asia's evolving capital markets and banks pulling back on riskier loans. Companies want flexible, fast financing. Private credit fills that gap. Deals range from buyouts to growth capital and infrastructure, with private lenders moving faster than banks. Australia, Japan, and South Korea lead the trend, but emerging markets like India are catching up. Investors are drawn by higher returns than in the US or Europe. This capital is fueling innovation, job creation, and economic growth across the region. But the market's rapid growth brings risks. Less regulation and transparency could hide trouble. Regulators are watching and calls for oversight are growing. Still, the structural drivers, demand for flexible capital and bank constraints, remain strong. The private credit boom is rewiring Asia's financial system. It's a trend with long-term implications for businesses and investors. Expect this story to keep growing. That's a wrap on today's financial headlines. Alphabet's $85 billion AI bet stands out, a bold move funded by strong earnings. Deutsche Bank's turnaround, the Nasdaq's record, and Asia's private credit boom all signal a dynamic, evolving global economy. Thanks for joining me. Staying informed is your best tool in today's fast-moving markets. Subscribe for more daily insights, and we'll be back with the stories that matter. Until next time, have a productive and prosperous day.